Today we'll be talking about a very powerful reversal pattern in the market called the head and shoulders. And really technical patterns or price patterns have a couple characteristics. One, they're typically either continuation or reversal patterns of a prior trend. And traders use those for either breakouts or to identify breakouts or breakdowns, to enter positions or manage risk. And technicians use targets to help plot targets as well. These are very important in the markets. And patterns can be drawn on a variety of time frames, daily, weekly, monthly, and identifying price compression or areas where price starts to get very small in the amount of a range that it has can help to greatly spot emerging moves in the market. So a head and shoulders reversal pattern is probably one of the most important ones in the market as far as the price pattern genre. And it's really a very powerful area to see reversals, and typically in market tops, major market tops, and sometimes market bottoms, you'll see these. And so here we're looking at an example. These are it's a daily price chart. Actually, I'm sorry, a monthly price chart. So each of these candles is actually 1 month. And what you're looking at is there was a prior uptrend. You just can't see it. It's to the left of the screen. And notice how price formed what looks like a left shoulder, the head, that middle blue bar, and on the right side a right shoulder. And this is called a head and shoulders pattern because it represents a person's head and a right and left shoulder. Now when you see this pattern, it is a powerful reversal signal in the market. But it's not complete until you see what's called the neckline. And in fact, price has to actually break down below the neckline for this to be valid. So just because you start to see it setting up, it's not a valid pattern until it actually breaks down where you see that blue arrow. Now interestingly enough, when you see this pattern, it provides an opportunity to calculate targets for where price may go. It's not a 100% guarantee, but this is a very high probability pattern in the markets. And so what you'll do is take the distance from the top of the head, you can see I've drawn that in that white dotted line there, to the neckline. And you measure that distance, and whatever that distance is, you take that and you point it downward, and this helps to develop the target. This is where price may go. And so the distance between the head and the neckline is plotted down from the breakout in the same amount, and that becomes your target area. Go ahead and take a look back at the S&P 500, the Dow. Major market turns quite often have at least some of these in there, and they don't always look this good, but it is a very powerful reversal pattern in the market and something that you should be aware of. Thanks, and good luck trading.